This is Nightly Business Report with Bill Griffith and Sue Herrera.
Bad news is good news. Fewer jobs were created last month than expected, but stocks took off despite the surprisingly low number.
Setting the tone, China's president changes his language when talking about trade, a reversal from all the recent harsh rhetoric.
House hunters, flippers are getting help from an unexpected source. Uber drivers. Those stories and much more tonight on Nightly Business Report for Friday, June 7th.
And we do bid you a good evening, everybody, and welcome. Well, the stock market soared again today, ending a week-long rebound rally that was fueled by hopes that the Federal Reserve is going to cut interest rates sooner rather than later. Also lifting the market was hope that tariffs on all those Mexican imports into the U.S. scheduled to go into effect on Monday can be averted. Mixed it together, stocks had their best week of the year this week. Today, the Dow was up 263 points, up to 25,983. The Nasdaq added 126. The S&P was up 29. And for the week, all of the major averages saw solid gains.
That big lift in the stock market, believe it or not, was driven by a lousy jobs report. Employers tapped the brakes on hiring last month, potentially signaling a slowdown in the 10-year economic expansion, which could in turn prompt the Federal Reserve to cut interest rates. And as we all know, low interest rates have been a pillar of support for the bull market. Steve Leisman has the details.
The May jobs report missing the mark by a long way and raising concerns about the economic outlook and whether the trade war is hurting the jobs market already. Just 75,000 jobs created in May. Wall Street had been forecasting 180,000. The unemployment rate remained low and unchanged at 3.6%, but wage growth rose a lukewarm 0.2%, and downward revisions to job growth in the prior 2 months reduced it by 75,000. That equaled all of the jobs created in May. On Wall Street, all the talk focused on whether the trade war was dragging down the job market. Morgan Stanley wrote, "This report will add to evidence gathered ahead of the June Fed meeting, showing that economic policy uncertainty may be increasingly weighing on growth prospects."
I think it raises the question about whether the trade uncertainty was already having some impact on the economy, prior to the latest escalation as far as Mexico is concerned. This, came after the original tweets about China, and I do think it raises that question.
The details of the report show government shed 15,000 jobs, and these are mostly state and local educational workers. Retailer, which has been losing lots of jobs every month, lost another 8,000, and manufacturing, which had been strong, grew a tepid 4,000. The week report raising the prospects that the Federal Reserve will be cutting interest rates and cutting them soon. The chance of a Fed rate cut for July, now around 80% in the Fed funds futures market, and the market is now banking on multiple Fed rate cuts this year. It's an aggressive call, one that may only hit the mark if the jobs report keeps missing the mark. For Nightly Business Report, I'm Steve Leisman.
And joining us to talk more about the jobs report today and what it may mean for the Fed, Satyam Pandey is senior U.S. economist at S&P. Good to see you again. Welcome back.
Thank you for having me.
I'll cut to the chase. Do you think the Fed's going to cut rates maybe as early as July?
Well, the report out today, it didn't really help in, establishing any confidence in, raising rates. So the odds of cutting rates have moved up, but I wouldn't go so far as calling it in July, though. Maybe perhaps in September or for a later date in December. But yes, the odds of a rate cut has moved up.
The manufacturing number was especially weak, and the Fed has said in the past that they are watching manufacturing and the impact from all of these global trade tensions and weaker global growth. How closely are they going to be scrutinizing the details of that?
I think this is the key point here. How much of a spillover effect from the industrial sector is going to seep into the much bigger service sector of the economy? We have seen manufacturing being decelerating over the year, and it seems like from the labor report that came out today, we haven't really added as many jobs as we had last year. So the Fed will be looking through it very carefully, both the activity numbers and the labor numbers in manufacturing sector. And the new tariffs, the escalation, the potential of it, certainly doesn't help in the outlook of manufacturing.
the Mexican tariffs aside, we still have Chinese tariffs in place, and there's no sign that they're going to end anytime soon. That can be inflationary. Do you see much in the way of inflation coming our way?
Well, there are two ways to look at it. You know, you may see a one-time bump up in the inflation numbers if these tariffs were to go through at a 25% rate that, they have been talking about. But at the same time, if it really affects the disposable income of a regular consumer, then the demand side effect might actually hold back the inflationary pressure. So net and net, it seems like inflation is not really moving up as fast towards the 2% growth rate that the Fed had anticipated earlier in the year.
Very good. Satyam Pandey again with S&P. Thanks for joining us tonight.
Thank you.
Chinese President Xi and Russian President Putin presented a unified economic front during a conference in St. Petersburg. As we reported yesterday, the two countries have been coming together to sign deals, and today another twist. And it had to do with President Xi's tone when it comes to trade with the U.S. Jeff Cutmore is there.
This was an opportunity to deepen ties and look stronger together, the building of an alliance in the face of tension with the United States. President Putin used his keynote address here to criticize the United States for its position on Huawei, suggesting that's the beginning of a tech war. He also said he felt the US had overextended its legal authority. And it's important to note that one of the deals done here, among the $20 billion worth signed, was for Huawei to bring 5G technology to the Russian market. President Xi also spoke while on the stage here at St. Petersburg, but I would say his language on trade was very measured, perhaps an indication that he doesn't want to use a venue like this to upset the delicate ongoing trade negotiations. And the reality is, of course, that for all the talk here in St. Petersburg, the size of trade between Russia and China is significantly smaller than that done between the US and China. Perhaps a reason why President Xi's language was cautious, and ultimately he described both Presidents Putin and President Trump as his friend. This is Jeff Cutmore in St. Petersburg for the Nightly Business Report.
And now to another issue that affects investors. That would be the capital gains tax. Billionaire hedge fund manager Stanley Druckenmiller said today he doesn't have a problem with a higher tax rate on capital gains, and he explained why.
I don't really think capital gains promote investment as much as advertised out there, and it's hard for me to believe Larry Page and Mark Zuckerberg and Jeff Bezos would have said, "Oh my God, the capital gains tax is going to be 35%. I'm not going to try and found Amazon or Google." So I don't have a problem with it.
Druckenmiller also said that ongoing trade tensions could potentially kill the market's animal spirits.
It is time to take a look at some of today's upgrades and downgrades. Exelon was upgraded to buy from neutral at Goldman Sachs. The analyst cites the company's free cash flow and calls the stock a top utility idea. The price target is $52. Despite the upgrade, though, the stock fell a fraction to $49.95. Schlumberger was upgraded to buy from hold at Stifel Nicolaus. The analyst says Schlumberger will benefit as business activity increases outside of North America. The price target is $50. The stock was up 1.5% to $35.60. And the arts and crafts retailer Michaels was downgraded to neutral from outperform at Credit Suisse. The analyst cites a softer outlook and uncertainty regarding the impact of tariffs. The price target is 11. The stock fell slightly to 8.17.
As we have been reporting, big tech's power and influence is facing increasing scrutiny in Washington these days, with some calling for breakups, others calling for more regulation. Well, tonight we take a closer look at Google and what officials may be eyeing in that company. Aditi Roy is in San Francisco for us.
In the 2 decades Google has been in existence, it's climbed up the ranks of top U.S. companies, raking in more than $130 billion worth of revenue last year. Now its dominance could be threatened as the company faces a government antitrust probe.
The United States Department of Justice, and particularly the Antitrust Division, they don't deal with argument. They deal with evidence.
In order to prove an antitrust case against Google, the government would have to prove that Google owns at least 30 to 40% of the relevant market. Google owns nearly 90% of the search market, according to Statistica, and about 3/4 of search ad sales, according to eMarketer. The DOJ would also have to show that Google preempts the competition by optimizing platforms like search. That's precisely what some third-party competitors of Google assert. For years, Yelp CEO Jeremy Stoppelman has been particularly vigilant against the company, saying Google squeezes out the competition by favoring its own web offerings by placing them at the top of search results. TripAdvisor CEO Stephen Koffer also says in a statement that the company remains concerned about Google's practices in the U.S., the EU, and the world, adding, "We welcome any renewed interest by U.S. regulators into Google's anti-competitive behavior." And Expedia Group Chair Barry Diller also spoke out about Google last fall.
Whenever you have that kind of control over the world that can't go anyplace else to get their stuff to a consumer, you also have to, inevitably, all monopolies behave the same, and you've got to have regulation of what they do once they get to that stage.
Legal experts say the arguments those third parties are making could carry a great deal of weight if they can prove them in testimony or contracts.
They're going to look at what the contracts show. Do the contracts limit? Do they prohibit? Do they foreclose opportunities in the markets for either customers that Google is dealing with or for other market participants? And the devil is in the contracts themselves.
Insiders also say the European Union's investigation into Alphabet could also help U.S. investigators by providing a framework for their arguments. For Nightly Business Report, I'm Aditi Roy, San Francisco.
Still ahead, our market monitor goes bargain hunting.
Walmart wants to take home delivery a step further. The world's largest retailer is rolling out a new program where employees deliver fresh groceries right to your refrigerator. Shares got a lift today along with the broader market. We should point out, though, that when Walmart announces new initiatives like this, many of them don't last very long or they don't go very far. Courtney Reagan has our story in Fayetteville, Arkansas tonight.
Walmart Shareholders Week is an annual tradition in Northwest Arkansas. Executives, board members, employees, and media from around the world, and this year even presidential candidate Bernie Sanders, come to the retailer's home turf to vote on shareholder business, get the latest corporate updates, and celebrate the year's accomplishments. In recent years, Walmart has also used the event to announce new e-commerce test programs. This year, it's Walmart in-home delivery, where store employees will deliver online grocery orders directly into shoppers' fridges. Available for 1 million shoppers in St. Louis, Pittsburgh, and Vero Beach, Florida this fall.
We'll come and install the lock and give you a 4-digit unique code that's only used during certain specified times that you allow for. We have our own associates, these are W-2 employees that have been with Walmart for more than a year. We have a camera that's on their vest when they walk in, and customers could actually watch on their app them come into the home, put the stuff into their fridge, and then leave.
The in-home delivery announcement is grabbing a lot of attention, just like the other past Walmart Shareholders Week's announcements. but they haven't all ended up making a material difference to the business. At the 2016 shareholder event, the retailer announced a partnership with Uber and Lyft, testing grocery delivery in Denver and Phoenix. 2 years later, Postmates and DoorDash were added. By May 2018, Walmart ended its partnership with Uber and Lyft, though still uses other crowdsourced delivery partners. At Shareholders 2017, Walmart said it was testing store employees delivering online orders on their way home from work in New Jersey and Arkansas through the use of a proprietary app. Around 6 months later, it quietly ended that program. Last year, Walmart launched text message shopping concierge service Jet Black in New York City. It is ongoing, and there's a wait list, but still only in New York City.
We've been trying a lot of new things lately. Our goal isn't to have a perfect track record. It's to make sure we're moving fast, taking smart risks. We want to continually learn, adapt, and push the limits of what's possible. At the end of the day, everything we're doing adds up to something really special.
So while in-home delivery is Walmart's latest risk, it remains to be seen if it will pay a material reward. For Nightly Business Report, I'm Courtney Reagan in Fayetteville, Arkansas.
A new chapter for Barnes & Noble, and that's where we begin tonight's market focus. The company has been acquired by hedge fund Elliott Advisors for $683 million. The nation's largest bookstore chain has been struggling for the past 5 years, losing more than $1 billion in market value. Elliott recently bought Britain's largest bookseller, Waterstones, as well. The shares rose more than 11% to $6.62. Norwegian Cruise Line said that it will be cutting its full-year earnings outlook due to the impact of the Trump administration's ban on cruises visiting Cuba. Cruise operators are modifying their itineraries and would offer substantial discounts to guests to remain on their booked cruises despite the ban. But the shares were up more than 1% today to $52.59.
Online fashion retailer Revolve Group soared in its trading debut today. This company focuses on millennial customers and attracts many of them through social media. Priced its shares at $18, they closed at $34. That would be up nearly 89% in today's debut. Pharmaceutical giant Sanofi has hired Novartis executive Paul Hudson as its new CEO. Sanofi's current CEO, Olivier Brandicourt, is retiring in September. Shares rose more than 5% today to $44.21.
It is time now for our weekly market monitor who likes stocks with good dividend yields. He has names that he says are severely undervalued in this low interest rate environment. Joining us is Jordan Posner. He's Senior Portfolio Manager at Matrix Asset Advisors. Jordan, welcome back. Nice to have you here.
Great to be back.
You're a value investor, bottoms-up process, and you like dividends. So let's start with your first pick, which is CVS Health. And of course, their acquisition of Aetna, you say, is a kind of a game changer.
Well, it really has reconfigured their business to be a much broader player in healthcare. Just earlier this week on Wednesday, they had an investor day where they rolled out a lot of the strategy and financial guidance for that business overall. And I think it was pretty well received. They're really transforming the healthcare business with a concept called Health Hubs, which is really taking space in many of their stores and converting them to like an urgent care type of clinic, but with more services and that people can use. We think the stock is very modestly valued at less than 8 times earnings, and has a yield of over 3.5%.
Home Depot, I was looking at a longer-term chart of this company. Now, you're looking for value, but a few years ago, this was a $75 stock. Today, it's a $200 stock. There's still value in there?
There certainly is. The stock is actually down from its high, within the last year. And what's happened there is that the housing market pressure from last year depressed some of their results, drove the stock down. But management there is very focused on shareholders. Now with the lower interest rate environment, we expect that actually demand for housing and home improvement should do much better. The stock is certainly more expensive than some. It trades just above a market multiple at under 18 times, but still pays a 2.8% yield. They're repurchasing stock and will increase that dividend significantly going forward.
Your next pick has a really nice dividend, 6.4% in terms of its yield, and that is AT&T. And you're saying basically that they are a key player with 5G coming up. But also the street is not really appreciating that Time Warner deal that they did.
Right. Now, that, of course, was a big marquee deal. It got a lot of attention, and people kind of thought of it as what could they do with it other than destroy the franchise. And actually, although there's been some management change there, the business seems to be operating quite well, generating a lot of free cash and profit contribution to the company. Now, with that and the HBO business, the Turner businesses together, they're going to be launching an over-the-top service. We think that that actually has the potential to be valuable. The stock trades at a very low valuation, under 9 times. And the core wireless business is a terrific franchise, and we think that they continue to operate very well.
On that note, Jordan, thank you so much. Jordan Posner with Matrix Asset Advisors.
And coming up, they're called drive-by flippers. They're part of America's changing workforce. In today's tight and pricey housing market, home flipping has been fizzling. The business is no longer as lucrative as it once was, but for those who are still in the game, a new strategy is taking shape, and it relies on the shared economy. You're going to love this. Diana Olick explains.
David Omanzor is a part-time Uber driver in D.C. And part of the time he's driving, he's scouting homes for an investor.
The porch there, you have somewhat of a tree, a limb that may have fallen, or something's growing up there.
So this says to you, this could be an opportunity.
This could be an opportunity.
An opportunity for Daniel DiGiacomo, the investor who hired him to scout properties. DiGiacomo has been flipping homes for a decade, but has never seen the market this tough.
As the prices are as high as they are now, the margins on our flips are pretty slim.
Nationwide, flippers saw an average return on their investment of about 39% in the first quarter of this year, down from 42.5% in the previous quarter and nearly 49% a year ago, the lowest return in 8 years, according to Atom Data Solutions. The number of flips are down 8% annually, so the stakes are up. Precisely why DiGiacomo has 150 drivers scouring the streets for opportunities.
The best deals are always the deals that we put our eyes on, and then I can't put my eyes on every single deal. So Uber drivers are out there, they're looking at all kinds of different neighborhoods, they're putting their eyes on many houses.
DiGiacomo used to go to auctions, but he says there are too many bidders there now, driving prices even higher. As for listings, low mortgage rates have too many regular buyers competing with him. That's why he'll pay a driver $500 for a lead that turns into a sale.
This year, that 150 group has put in about 2,200 leads, and then we normally close about 1 deal per 100 or 150 leads.
Omanzor, who dabbles in real estate himself, sees it as easy money because he knows what to look for.
Windows are broken, it's not updated. You may see some exterior outside AC units sticking out of the window. There's tons of mail, overgrown grass.
And when he finds one,
the property next door is a corner lot, which is a great opportunity for investors.
he just takes a picture on a special app that pinpoints the property and all its details and sends it to DiGiacomo. If it sells,
just made $500 and I just drove around.
For Nightly Business Report, I'm Diana Olick, driving around Washington.
And before we go, let's take a look at the final day's numbers on Wall Street. The Dow rose 263 points to 25,983. The Nasdaq added 126, and the S&P 500 was up 29. It was a good week. For the week, all of the major averages saw solid gains. And that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching. We'd like to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith, and we thank you for your support. Have a great weekend, everybody. We'll see you Monday.